It started quietly, on a humid morning in Washington, D.C., June 11, 2025. Reporters filled the White House press room, cameras flashing like strobe lights. On the podium stood a familiar figure, former President Donald J. Trump, once again a central player in America's financial destiny. "Ladies and gentlemen," he began, his tone calm, yet commanding. "The future of American money begins today." Behind him, a single screen lit up with a gold eagle superimposed over binary code. The banner read, "The Digital Dollar Act." The room went still. No one breathed. Journalists exchanged uneasy looks. The country had been talking about Central Bank Digital Currencies, CBDCs, for years, but now it was official. The United States was going digital. At first glance, it sounded like innovation, a chance to modernize the financial system. But hidden beneath the promise of efficiency was something else, something darker. The cameras caught Trump's final line before the feed abruptly cut. Every dollar, every transaction, every American connected. No one in that room realized what those words truly meant. And outside, in places like Des Moines, Iowa, and Toledo, Ohio, life carried on. People buying coffee, paying rent, checking their accounts, unaware that within months, the very definition of money would change forever. The markets responded instantly. The Dow spiked 600 points, tech stocks surged, and mainstream media declared a new era of financial freedom. But in the quiet corners of Wall Street, analysts whispered uneasily. A centralized digital currency meant total traceability. Every purchase, every transfer, visible to the Federal Reserve. The Federal Reserve would hold unprecedented control over liquidity and interest rates. The U.S. Treasury could stimulate or restrict spending with a few lines of code. Ordinary Americans, like James Porter, a 47-year-old truck driver from Tennessee, and Maria Lopez, a small business owner in Arizona, would unknowingly hand over their financial privacy for convenience. Economists called it programmable money. Critics called it financial surveillance. And somewhere between those two truths, the clock began ticking toward a decision that would reshape the American economy forever. Because the Digital Dollar Act wasn't just about money, it was about control. And in the heart of Washington, a quiet debate had already begun. Who controls the controller? It didn't start with Trump. The seeds were planted back in 2020 during the COVID-19 pandemic, when the government sent out stimulus checks. Many Americans wondered why, in a world of instant payments, it took weeks for aid to arrive. The answer, officials said, was infrastructure. So, the Federal Reserve began quietly developing a pilot program, FedNow. By 2023, that pilot evolved into something bigger, Project Cedar, a test for instant, blockchain-based transactions. Few paid attention. The stock market was booming again. Inflation was cooling. But a handful of senators, including Rand Paul and Elizabeth Warren, raised red flags. Paul warned, "A digital dollar is not just a dollar, it's a leash." No one listened. Then came a small but telling event. The closure of 3 mid-sized banks in early 2024. Depositors panicked, and suddenly, a government-backed, instant, secure, digital alternative looked like salvation. It was the perfect storm, and no one saw the lightning coming. Behind closed doors, inside the Treasury building, debates turned fierce. Treasury Secretary Janet Collins, a fictional composite of real-life policymakers, presented a chilling argument. If we don't digitize the dollar, China wins. Her point: the digital yuan was spreading across Asia and Africa. The U.S. risked losing its financial dominance. But several senators countered, warning that a fully digital dollar would hand the government the power to freeze or erase funds at will. Yet the political pressure was immense. Patriotism, Trump called it. Economic survival, Collins insisted. Freedom through technology, read the headlines. Meanwhile, in Toledo, Maria Lopez was fighting to keep her small cafe alive. Her merchant fees had tripled. Cash was disappearing. Local banks were closing branches. One day, a sleek representative from a new fintech firm approached her. "Ma'am, we're offering free integration with the new federal payment system. Instant settlements. No fees. Just your ID." She signed up. Within days, she was on board into the digital dollar network, unknowingly stepping into a system that tracked every latte, every payroll, every tip her employees made. Two worlds, one of suits and policy, the other of people and survival, were now tied together by invisible code. And soon, one would collapse into the other. At first, it worked beautifully. Transaction speeds were instant. Inflation dropped slightly. The dollar strengthened globally. Trump's approval ratings soared. News anchors called it the dawn of a financial renaissance. Economists cheered. Finally, accountability in the money supply. Even James Porter, the truck driver from Tennessee, noticed something strange but welcome: gas discounts when he used the new digital dollar wallet. He thought it was just a perk. Then came the first countdown: 90 days until full digital transition. Physical cash would soon be phased out of circulation. Banks were instructed to limit withdrawals. ATMs went offline for updates. But buried deep in the Digital Dollar Act was a single clause, Section 4B, that read, "In the event of national emergency or digital security risk, the Treasury reserves the right to limit, suspend, or redirect wallet functionality to preserve economic stability." Most people skipped that line. They'd soon regret it. By September 2025, something strange began happening. Small business owners like Maria started reporting temporary holds on their accounts. Delays in receiving payments flagged as security audits. James tried to wire money to his brother in Kentucky and got a message: transaction denied. Exceeds current behavioral spending limits. The system, it seemed, was learning their habits. AI algorithms now decided what was normal spending and what wasn't. Inside the Federal Reserve, analysts debated whether this was ethical. "It's for safety," said Secretary Collins, "to prevent fraud." But one insider leaked documents showing that behavioral restrictions weren't just about fraud. They were about policy enforcement. The government could now incentivize or punish spending in real time. Buy too much gas? Your carbon index rises. Donate to a flagged organization? Your account freezes for 72 hours. The hidden villain wasn't a person, it was the system itself. And it was working exactly as designed. October 15, 2025. An investigative journalist from the Wall Street Ledger, Rachel Kinsey, published a leaked memo titled Operation Ledger Lock. The memo revealed that during the drafting of the Digital Dollar Act, a private tech consortium, composed of several major U.S. banks and cloud service providers, had direct access to the blockchain code. They weren't just helping build it. They were helping control it. Public outrage exploded. Protests erupted outside the Federal Reserve in New York. The White House dismissed it as disinformation. But then, one crucial detail surfaced. One of the consortium's members was Civitas Analytics, a firm that specialized in behavioral tracking, previously contracted by several political campaigns. The digital dollar wasn't just programmable. It was profiling its users. And Rachel's final line hit the internet like a thunderclap. The question isn't what the government can see, it's what it can decide to allow. Banks began tightening credit. Independent businesses struggled to stay compliant with new digital audit standards. Maria's cafe was flagged for excessive cash-to-digital ratio. Her account was frozen pending review. Within weeks, she was out of business. James, the truck driver, received a government alert. Your travel route exceeds current fuel policy limits. Please adjust. He couldn't complete his deliveries. He lost his job. Across America, millions of users began noticing social credit, like patterns emerging in their financial lives. The same system that promised freedom was slowly chaining them to algorithmic obedience. Meanwhile, markets trembled as foreign nations began selling off U.S. bonds, fearing instability in the digital infrastructure. And yet, most Americans still clung to hope, believing this was just a phase. They didn't know the worst was yet to come. In December 2025, Trump announced an emergency economic address. The reason? A massive cyber attack on the digital dollar infrastructure. Wallets malfunctioned. Balances disappeared. Panic spread like wildfire. But as forensic teams investigated, something shocking emerged. The breach didn't come from China or Russia. It came from within. A whistleblower inside Civitas Analytics confessed that the firm had built a backdoor, a secret kill switch for the entire digital currency system. Their justification? To prevent political misuse. But that backdoor was discovered by hackers and exploited. Within hours, $1.2 trillion in assets vanished from circulation. Markets crashed 40%. Banks froze withdrawals. And the final revelation. The government had known about the backdoor for months and allowed the rollout anyway. It wasn't incompetence. It was calculated risk. By the spring of 2026, the system stabilized, but America wasn't the same. Cash was gone. Trust was shattered. Rachel Kinsey's final documentary aired posthumously after she vanished under mysterious circumstances. Her closing narration echoed through millions of screens. They said money would make us free. But freedom without privacy isn't freedom, it's permission. James moved back to Tennessee, bartering fuel for food. Maria started a cashless resistance group online, teaching others how to trade digitally, but off the grid. And in Washington, the next administration promised a reform to the system. Yet the code remained untouched. The digital dollar became as common as air, everywhere, invisible, and impossible to escape. So, what happens when the system that tracks your money starts making decisions for you? Is it safety or control? Comment your thoughts below. And remember, the future of freedom may not be written in laws anymore, but in code.